Hey everyone, happy Monday and welcome to Markets Mindset and Money. I'm Matt Donahue, and today we're diving into the week's economic action, a tax tip you didn't think you might have needed, and a little Stoic Wisdom to help keep your feet on the ground while your financial plans take flight. So let's get to it. So market recap, mixed messages but clear signals. So first up, inflation. The Fed's preferred gauge, PCE, came in at 0.3% for February, bringing the year-over-year rate down to 2.5%. That means inflation's cooling, but it isn't cold. That's enough to keep hope alive for a rate cut later this year, but don't get ahead of yourself. The Fed is still on alert. Consumer confidence is not great. It dropped to 92.9 in March. People are feeling the sting of sticky prices and high borrowing costs. But then we get to business activity. PMI rose to 53.5. So translation, businesses are still growing, even if consumers are cautious. It's a choppy picture, but it's not recession. Not yet. The week ahead, Germany's going big. Here's a story to watch. Germany is about to unleash over €1 trillion in defense and infrastructure spending. That's the biggest physical push since the Cold War, and yes, it could absolutely reshape Europe. This isn't just about potholes and tanks, it's a signal. Europe's ready to take more control of its future. For investors, European equities are already up 16% this year, and they might just be getting started. Defense and industrials are leading the way. Bonds, on the other hand, could struggle as borrowing ramps up. So if you've been ignoring international markets, it's time to stop that and take a look at a diversified investment strategy. Some wisdom of the week. Marcus Aurelius is checking in with us this week. So let's shift some gears here. Marcus Aurelius has a quote: "Hurry to your own ruling reason and to the mind of the whole." Look at it this way. If you're not acting with reason, what's driving you? Is it your habit? Is it your emotions? Is it Twitter? I guess X, whatever. Markets move, the news cycle spins, but your best decisions, financial or otherwise, always come from clear thinking and a long view. Use your reason, trust your plan, check your impulses at the door. Now, for some tax tips, some smart tax moves, what counts as income? Well, here's a rule. All income is taxable unless the IRS says it isn't. So that includes wages, tips, even barter deals. Yep, if you trade your guitar lessons for someone's landscaping services, that's considered income for both of you. Some things are usually not taxable, though, and those include things like life insurance, qualified scholarships, gifts, child support, welfare benefits, adoption reimbursement, post 2018 alimony, and foster care payments. If you're not sure, ask your tax pro before the IRS asks you. We're going to talk a lot about Social Security this month. We have a webinar coming up on Social Security later in the month, but here's a quick hit for you. Yes, your benefits are taxable. In fact, up to 85% of them could be taxable if your income is high enough, 25,000 for singles or 34,000 for married couples. If you take benefits before your full retirement age and keep working, the government might withhold some of your checks. So what do you do about Social Security? Get a plan. Work with a certified financial planner to model your income sources. Grab a copy of our Social Security planning card or the 2025 key financial data card. They'll keep you dialed in. So thanks again, everyone. We hope you all have a great rest of your week, and stay tuned for next week. Talk to you soon. Bye-bye.